Hello. Hi. In this video, I'm going to be recording the process of placing trailing stops. Um, Now, the idea of trailing stops, probably we need to talk about that first, is you want to start to lock in profits without necessarily exiting the trades immediately. So if price is going in your favor, there's no need just taking profit on everything, closing the entire trade and running away. But what you can do is, like in the previous video where I recorded about how to take partial profits. Yes, indeed, you can take partial profits, but then you can leave some of the trade open and just start trailing that move in your direction. And the example here is in this system here where I'm trading the 5TT wave strategy. We can see here that this trade here, which is Euro USD. Euro USD, the entry was at that level there, and half of that trade has closed, and price has started, is also moving in that direction. So it's a sell trade, and price is continuing to move downwards. Now, what's happening here is that the original trade would have had the stop loss, and when we got into that trade, the stop loss would have been somewhere around there, but you can see the stop loss has moved. So what's happening then is as price continues to move down, the stop loss is also moving down with the trade. And so at some point, you will see the stop loss will then be below the entry. When that happens, it means that that trade now becomes 100% risk-free trade, because if price comes, say the stop loss comes down to this level here. If price comes down to this level here, it means that it's locked in this profit, this amount of profit. And if price continues to move down, you can just keep going down and down and down, trailing the stop loss. And that's what trailing stop loss means in principle. But the question is, where do you put the trail? And there are various rules, and depending on the system, you've got to use various principles. In this example here, the 5TT wave strategy, we are trailing the 89 EMA. So we're just something like 2 pips above the 89 EMA, and we'll just be trailing that. So as long as the EMA keeps going down, we'll keep trailing it. Let me see if there's any example. Oh, let's see, GBP AUD is on a buy trade. Let's see if we will see a perfect situation there. GBP AUD. Right. So we can see this is a perfect example here. So the first trade buy there, we can see that buy trade got in at that level there, right? And the stop loss would have been down here below the 89 EMA. But as price has continued to move, the stop loss continued to move, trailing this 89 EMA. And right now, the stop loss is above the entry price. But what you notice as well is that a second trade was then opened there. A second trade was opened there, and that trade has its stop loss again below the 89 EMA. So the two stop loss levels are below 89 EMA, but for one of them it is still below the entry, but the other one it is above the entry. So it's just trailing this. So if that continues to go up, that stop loss will keep going up as well with it until maybe the second one as well, and it just keeps going up. And so that is one way of doing the trailing stop. Now the other way that folks also use the trailing stop principle is you can actually, I'm trying to get a good example to use. Right, so again, you can see here that the stop loss is trading on this as well. So that was the entry level around there, and stop loss would have been originally there, but you can see it's trailed and come down here, and it's still moving down. So let's see. Now let's get a fresh chart. Probably easier to explain. let's get it blank. So let's say, for instance, if we took a trade here, so we saw this opportunity here, price moved up, then came back down, retested this area, and then pushed back up. So if for whatever reason we took a buy trade here, and so we would have been on the buy trade right here, our original stop loss would have been placed so that's the entry. Original stop loss would have been placed around here. Let's change the color of that to red. So if the original stop loss as it is here, then when we're trading the stop loss, as price begins to move up, we can see now that price has closed at this level here. Then once price closed up here and the next candle opens, you can move this stop loss to the low of that candle. Yeah, and that would have reduced the risk. It's not 100% risk free yet. Price would have reduced the risk. And then if when price went up and closed above there, one can also move the stop loss to the low of this here. So then this becomes a 100% risk-free trade. And if price continues to move in our favor like it did here, then this candle here closed up here would have moved the stop loss to here. Then that next candle opened and closed up there would have moved it to this point here. And you can see now how much we've saved. This is all free money up here, right? Right now is about 39 pips. Yeah, then that one moved up, closed up there, would have moved the stop loss to here. But what can you see? Price then went up on this candle. It came back down first and touched here, so we could have been taken out of that trade because we would have hit. This is a buy trade, right? So we'll be going out on the bid price, so that would have been exactly the bid price would have been taken out on that trade. But if you were trailing, you can trail the stop, so you can trail those lows. So the first one you can trail it by maybe 5 pips, and then the next one you move up, you trail by another 5 pips, just to allow for situations like this here. So you can trail for 5 pips, then you can trail the next one 5 pips. If that was the case, we would have probably had this maybe around here, and we would have still been in this trade. And you can see what price just kept doing for all this time. Price just kept moving, none is closing above the other. So here we could have decided at the point where this, in fact here, so price came back down here, so didn't close, then it came down here, closed below this. We could have either gone out here or waited. Then this came back down again, closed here, it's around the same place, so stop loss will probably be around the same place. Then what did we get? Price then closed up here. We could have just moved this 5 pips below this, and then what happened? This candle here then took us out of that trade, if that's what we did. So that's another way to trail stop loss. That's like 58 pips. So that's one way. Another way to trail stop loss. I showed you now where you can use a moving average to trail stop loss. Here you can also trail the stop loss by the candle, as it were. So various ways you can do this actually. There's no one way you can do it. In this other example here, so let's see something like this. Let's go GBP JPY because that gave us some nice trade today. So this would have been a sell trade which entered around here. So the other rule for trailing stop loss could also be that your initial stop loss is right here, yeah, but once you hit the TP1, you want to move your stop loss to maybe around this level here. Then as price continues to go down, you might want to then move your stop loss to break even. What is break even? Is usually break even is if price comes back and takes you out at your entry price, you've broken even, but you've got to consider the spread on that currency pair. So maybe break even plus spread, which might be around here, so that if for whatever reason price comes back up, it takes you out, you make money on the half of the trade you've taken, and you also make this tiny spread that you have there. So that's another way to trail stop loss, as it were. So one will ask me, how do you do it on the open trade? So you can go, this is GBP JPY. I don't have a GBP JPY trade open. I have one here on Euro USD. So let's say you want to move it to this level here. So taking the high of that candle plus maybe a couple of pips. So you want to move it to this level here, which is 1.0622. All you need to do, one way to do it, and I'll show you the quick way to do it right now. So 1.1066. So what you want to do is just click. Once you get your mouse, you can see it's just a normal arrow mouse, but once you point it on your stop loss line, can you see that there is now an up and down arrow, black arrow by the side? It means you can click, hold, and drag it up and down. So if I click, hold, I can drag this up and down. You can see that, yeah? Now you want to look at the left hand side as well and see that price is actually changing. You can see the USD value is changing. So if I move it up this way, it's telling me if price hits me there, I'll lose $8.58, and that's equivalent to 28.6 pips. But right now price is there, but I want to move it down here, just above this level here, which in this case is equivalent to a loss of 0.99 USD, so $1 loss, and that's equivalent to -3 pips. And if I leave it now, you can see it's changed it automatically. Yeah, so that's how you can trail the stop loss. Then you can leave it to continue going. Then when price moves down again, you can move it down again just easily like that. But I'm going to move this back to my original. Yeah, something like that. Okay, so you can see what I've just done there. What another example is a GBP. So let's go to that GBP AUD example and see if I can do something with that. So GBP AUD, the one I want to change though is the stop loss for 548,778,263 ticket. So the other way you can do it, the long way, now I'm going to go the long way, is I can say, okay, oh, price has moved up, that's a can, I want to move it to a couple of pips below that green candle, that one there. So let's zoom in. So we want to bring price, so remember this is the one that we want to adjust here, the one that ends with 263, and we want to bring the stop loss to the low a couple of pips. So let's say 1.91508. So all I'll need to do is to go here, right click on that currency, that open order, modify. Can you see? Can modify. Yeah, so we can modify, and the stop loss level I want to move it to is 1.91508. So this new stop loss I want to move it to is 1.91508, and I can just modify it. Oops, my connection just went. But yeah, that's exactly what you need to do, and you can just keep doing that and every time you want to trail the stop loss and to whatever level you want to trail it to. I hope that makes sense. If you have any questions about that, please do come back to me. I typically will not manually trail my stop losses. I have automated systems that help me just do that, as it were. Okay, so yeah, let me know if you have any questions, or if you require further clarification on this, and let's do it for you. Okay, you take care, and have a good weekend. Cheers.